And now I'm finally back after a long break, yeah? So they call me Dinox Tunji Khalifa, Tamara Margovi Kashia Michael Jr. Panditing, Chief Inspector, bro, the Heistmaster, hey! And we are the Heistmastersfx dealing with foreign exchange. So today, I'll be offering you the second series of our classes, whereby I'll be teaching you a simple strategy of support and resistance by the Chief Panditing, Mr. Udono, you're about to know. So in a few, I'm going to take you into deeper details, and if you want the fuller video, get it at YouTube at Heistmastersfx. Panditing! Let's say we have this movement like this, and then we have like this, and then we have like this. Yeah, this is an uptrend. Yeah, because an uptrend consists of higher highs and higher lows. When I'm talking about higher highs and higher lows, you can see this high here is higher than the previous high here, and this higher low here is higher than this previous higher low. Now that is why you consider this an uptrend, because this market is pushing upwards, up to there. Are we together? Yeah. So I can add something about this market so that you can get it comfortably. Yeah. For example, what happens until we get this uptrend? Yeah. Now this is an uptrend. So for example, we had this price previously falling from this side. Let us employ some of the practical example. For example, we have this, let us say this is the price of a Mark X Toyota car. Yeah, it was selling at 1.5 M. You see, now this particular kind of a car, this Mark X of ours, is now selling at 1.5. Yeah. Now the price, when the price decreases, demand increases. Yeah, that is why we have this going on an uptrend. Now when the price reaches here, the broker of this particular car decided to put an offer. Now this car is no longer selling at 1.5 million, is now selling at 1.2 million. Now the decrease of this particular kind of a car from 1.5 to 1.2 will attract a lot of customers, yeah, so that they can buy this car with this offer. Now the reduction of this price from 1.5 to 1.2 will mean now we have demand. We have a lot of people who want now to purchase this particular car. Now that is why an increase in demand of this car will push the price in the market of this particular car. Now we'll have an uptrend, meaning the price of this price of a car at this particular kind of a market is no longer now falling. Now it is going on an uptrend. Now you can see now the price of this particular car is on an uptrend, and whatever that comes down must rise, and whatever that rises must come down. Now what will happen when this particular kind of a car, everybody now has bought it, it is now going to lose value. You see, every time when something is overbought in the market, it is definitely going to lose value. Now everybody has a Mark X, and it is the same way when we have a new shoe in the market. Everybody wants to purchase that shoes. Yeah? Everybody has it. Now it is losing value. Now what happens when this car of ours, everybody now has purchased it, it is definitely going to lose value, and now we'll have buyers will now stop purchasing this particular kind of a car. And what do we expect in this particular kind of a market? Now the price of this particular car will be now falling back. Yes, up to that particular point. Have we understood? Now another thing that can lead to this particular kind of a car falling back. For example, at the beginning we never had this offer of 1.5. This car is selling at 1.2 M, because it is affordable for everyone to purchase it. Everyone was going for it. Now the demand was increasing. When we reached at this particular this level, now the broker saw that everybody is interested with this particular kind of a car. Now let me hike this price to 1.5, and people are no longer comfortable with the decision, or people were no longer able to purchase that particular kind of a car with 1.5, hence they stopped buying it. Now that is why we had the price falling down. So these are two different zones. Here we said there is an increase in demand. Here we have this is a concentrated demand area. Now we are going to call it a demand zone. And this we said here, when the price reach here, now this is a supply zone. In other words, we can call this line here, this line, let me change the color. Every time I'm teaching, I like starting from scratch so that you can understand what is actually happening here. Now in other terms, we can call this blue line here support, and in other terms we can call the upper blue line here resistance. Up to there, I hope you are okay and you are fine. Now let us go further into definition of terms so that you can understand what is this supply zone, or the resistance zone, or the demand zone. In other terms, the support line or support level. So let us start with support. So in other terms, support is where the price often stops falling and bounces upwards. Up together we are okay. So support occurs when a downtrend is expected to pause due to a concentration of demand. Exactly what we have been talking about. Now let us define what is a demand zone. So a demand zone is price area in the stock where there is high demand for the stock and buyers are ready to purchase at different levels. Remember, at this demand zone, when the price of this particular car is selling at 1.2 million, we have buyers and we have a demand pressure for this particular kind of a car. Hence, buyers are willing to buy now this particular kind of a car at 1.2. Hence, the price will bounce now back, and we'll have buyers controlling this particular kind of a market. Up to there, are we okay? I'm loving it. So they call me Chief Panditing, Mr. Bollinger Barnes. We'll be coming to that in a few. Now let us go to resistance. Now resistance is the upper line here, the upper blue line. So what is resistance? So resistance is where the price normally stop rising and deepens down. In other words, the resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. Now that is why we have a supply zone over here. So when we are talking about demand and supply zone, so demand zone is present below the current price level. When I was talking about the supply zone, we never said where it occurs. Now this is when you see the supply zone, it has the highest selling potential, which is above the current price. You can see our supply zone is above this current price here. Okay, up to there, I think nobody is confused. I have to start from scratch before we actually go into the market, whereby we can identify this particular kind of trends in the market. So supply zone is a zone where there is high liquidity in price, and traders usually trade using sell orders. What is this liquidity?